Jim, yesterday it was the World Bank. Today it's the OECD cutting their global growth outlook for the U.S. all around the world and nearly doubling their forecast for inflation.
Well, look, how can you not cut growth? We've got conflict nations in Europe that are slowing, China not really opening. We are gripped by what's happened with Target and then this morning with mortgage originations. I just don't know about the inflation side of it. I think that a lot of that is just related to oil. Otherwise, we should be thrilled. We have a glut of retail that makes it so that everybody is involved with a promotional activity. Anything promotional is really good for the consumer. We see mortgage rates really going up enough that maybe we'll get a glut of housing. And those things are deflationary. So I think that the one remaining part is oil. And oil is very geopolitical. And plus, the president refused to go to the Permian and say, OK, guys, what can you do for us? What can we do for you? Because that would mean concessions to fossil fuels. And the president's just not going to do that. He'd rather go to Saudi Arabia and try to get them to pump than to go to Texas. And that kind of foolishness is hurting the American consumer.
Man, you come back to this every day, Jim. It's really
because it's right.
It's interesting to me. I mean, I think it is worthy of a bit of a conversation. Yeah, there is certainly a desire on the part of this administration to try to attack climate change in a real way. I know you believe that it's a real threat. I know you're not dismissing that in any way. You know as well as I do that it takes time, even if you were to, I'm not quite sure what, government leases. I'm not quite sure what you're looking for in terms of him saying pump more and them saying yes, when their shareholder bases as well seems somewhat uncertain as to whether that's really what they want and would much rather have the money returned to them in the form of a dividend and or share buyback. So I'm curious as to what you think that conversation is going to be since you bring it up every day.
Sure. Well, look, I think that ever since the president has been talking about going to Saudi Arabia, he's also talking about how solar is going to help us here. That really doesn't help cars. He's actually cracked down. He's actually said that there's got to be more oversight on pipelines. Well, I mean, you can't have it both ways. You can't say there has to be more oversight for pipelines and at the same time say more pipelines. And so he's withholding quick approval of pipelines. He is making it so that there's no real credits being given if you're trying to do carbon capture. Now, David, you have a very important documentary on June 22nd at 8 o'clock with Exxon. I think Exxon is a changed beast. I think if I were the president, I'd say, you know what? I think Exxon is trying to break bread with us. I've got to break bread with them. But no, the president doesn't want to do that because that would mean that his green constituency, not unlike the green constituency at Germany that ended up, I think, putting us in the situation we're in, the green constituency is too powerful. And I think what he doesn't realize, what Biden does not realize is those people aren't going to vote for the Republicans ever. So what's the point? Why not sit down with Mike Wirth, with Darren Wood, say, OK, listen, I know that maybe even if you start now, it's going to take a year, but we've got to get this thing down in a sense that we know at least a year from now there's going to be more oil. Go from 12 million to 14 million barrels, and we will know that oil is going to stop eventually because there is a yield. There's a curve, David.
No doubt. I understand, and you can talk about an out year, a year ahead, but it's going to obviously impact potentially prices a lot sooner than that. I get that.
Right. So you're with me. Thank you.
Well, no, I do think Exxon is a change company, and people can judge for themselves. They can judge for themselves 2 weeks from tonight, 8 p.m., June 22nd, because we have access to the company that nobody's ever had. So you can judge for yourself as to whether you think it is a change company and whether it's serious about attacking its own carbon footprint as well as that of the world, so to speak. At the same time, you do need a price on carbon. You need it to go up significantly. You're absolutely right, Jim. But again, I still come back to the shareholders because I do believe that is also an impediment to tough decision making on the part of many of these companies in terms of saying we're going to put a lot more money back into the ground.
Well, look, I know the kinds of things I've been coming up with the oil guys haven't liked, which is how about it if the government just gives you money, it goes right to your shareholders and you pump more? Well, neither side's going to do that. I've been trying to work on things. I keep coming back to credits for carbon capture. Make it so that it's you spend money, you get more, you don't get hurt. I think the government's more likely to do a windfall tax on the refiners, which is not what you want. The big price is a lot of the price that you're seeing at the pump is because of the shortage of refinery. And I'm not asking for Keystone. Keystone would have brought heavy crude that was ideal for our refineries. But, David, all I want to see is some discussion Do you agree with this? Do you agree with this? Better to go to U.S. producers than to Saudi producers, hat in hand. Which one's better to go to?
Yeah,
Who would you rather negotiate with?
Look, Carl, in my opinion, it's certainly, for whatever it's worth, better to have the conversation regardless. Always have dialogue. I think that perhaps some would say that has been a blind spot of this current administration, their unwillingness to a certain extent to talk to certain parts of the business community. In my view, you always talk to them in every way. They're an incredibly important component overall of what's going on in this country. So, yeah.